Good morning, everybody. So we ended up having a really nice day yesterday after the stream ended. Those puts ended up doing super good. We took the portfolio from basically 4,400 to 5,400. Now, today is OPEX, which I generally do not like trading on OPEX. Um, Main reason why is because they pin the prices, and usually it's a very choppy day. So it's not usually the best time to take trades, but we will try to take some trades if we see the opportunity available. But this stream might just be a lot of searching for what's going on for next week, basically. Do have a smaller cup there, potentially form the handle. But we also still have this major inverse cup to deal with. Good morning, everybody. Thanks for joining. So we also have that to deal with. I want to put this in blue today. Which, if we are going to take the inverse cup and handle, then we have a ton of liquidity right in this range. To take hold of. So, it's kind of what we're looking at today, is that either we will get the cup and handle breakout and get the bullish price action to the upside, which so far in the pre-market and everything, it looks great, but the pre-market doesn't mean a whole lot when it comes to the actual intraday, because obviously this buying can reverse very quickly. You put in a request I want to duplicate yesterday. So Tommel, how did your puts do yesterday? I want to know that. Because I know you had a whole bunch of them going. Hold on, let me just look at some things. So basically the big point of what we're going to be doing today is we're not going to be engaging the SPY too much, okay? And I know I said this earlier, but I know people are just joining up in the stream and everything, but today's OPEX, and not only is it OPEX, it's the SPYX dividend, which took basically a whole $1.90 off the top price of the SPY. It's not really going to matter too much within the price action right now, but OPEX, they usually try to pin prices very hard, which obviously can give us some issues. Okay, so we want to see what the gamma is telling us this morning. We want to see actual signals of what the market's doing. So we want to wait for, seeing if the HIG is buying upward or downward. We want to see what our volatility is doing. We want to see what the yields are doing. We want to see what, pretty much everything's doing before we really take positions on OPEX because they will chop us up. It's okay. Laws, there's always, you know, there's always trades to be had. Even if there was a good day yesterday, there'll be a good day in the future, so. Oh, that's you, Tom. Well, okay. Great. So we have 6 minutes until market open. Um, Again, we're going to be looking at everything when the market actually opens. So until then, I kind of want to just go over some of our other positions. So our drip positions are looking great. It's looking very close that they're going to push that 5.5 range very, very soon. I do have DraftKings puts, which they are going to be down very, very slightly today, but those were up 150% so far. So let's look at DraftKings really quick. Kind of looking for this range to be taken out. I don't know why the put says 0. It's up like massively. But looking for that for DraftKings. Now CVS. Interesting, we had a big candle down to the 93. So that's looking good for our puts. Yeah, it definitely looks like they're going to try to pull down later. Now, American Airlines. Let's see, it's currently in the pre-market at 1579. So we are looking for this exit basically at the 1650. So that should be hitting very soon here. Now let's see, our GDXW is down slightly. But I did add another 20 shares yesterday to this portfolio. I definitely want to continue piling into GDXW. Um, as a, it is a very, very good dividend, even though the dividend right now is taking a little bit of a hit, but in the grand scheme of things, it will recover quite nicely. So, what else are we looking at? Our success puts are going to be up very, very nice today. And I did add some of those yesterday as well, during the low on the SPY, but I added some the July 17th stock says 4 puts, so those are basically going to be up massively. Now, SPAXU, we still have the 35 puts going for July 17th. We still have, quite a bit of way to pull down there, but we should start heading down there fairly soon, assuming we're going to, actually start seeing some bullish price action out of the SPY. Now, Target Therapeutics is kind of cooking me right now. So let's get this other watch list going. I have a 48 put. They've been working very, very hard to continue pushing this against this upper Bollinger on the daily time frame. So I might even try to add to this, because again, we do have this very large cup closed. I do expect a pull down. TQQQ, our calls should be doing very nicely. WTI is pulling down in the pre-market to the 3.23, so very close to having all of our 3-strike puts, just absolutely blast off. Drip again, we still have massive upside. Market opens in a minute. Now our TSLL calls are taking a little bit of a beating, but we should be seeing a reversal fairly soon, especially out of Tesla. We do have a very large cup formed, very likely forming the handle to the upside. Now I want to look at Plug. Now Plug has been giving us a little issue, but this is still a very nice formed cup with what we're trying to find as a handle. Okay, portfolio opened up at 5,500, so that's good. Okay. So for the SPY here, and we do want to look at what's going on with the dollar. Obviously, the dollar is very, very, very elevated right now. This can be a bearish weight against equities. Where's the HIG? HIG is basically still at that same level as yesterday, so we do have to be a little cautious about that. Potentially it's even starting to sell in here a little bit. So we'll watch that in a couple minutes here. Now I want to look at the SPY. Now technically this is the range to kind of open puts because we're pushed above the upper Bollinger on the 5-minute time frame, but I'm not going to just yet. Again, this is OPEX. I really don't like to mess with OPEX days, so unless I see very, very, very clear signals, then I don't want to engage in it. So volatility pulled up to 95.52 yesterday. It's currently at the 90.46, 90.22. So if we continue to see that pulling down, then that will be a good signal for us to continue pushing to the upside. Now again, this upside target is pretty reasonable. Our first target would be that 750 or 748.72. So with this cup being closed, I'm basically looking for this pull down and the handle to be able to engage into calls to the upside. And I want to see the US 10-year. Has been pulling down since this morning. Ignore the drawings on that. It's a mess right now. Now TLT, I'm gonna very likely start taking positions in again fairly soon. Not yet, just because it is pushed into the upper Bollinger. I do want to see it pull down slightly from that. And we are seeing semis pushing. So very likely going to close this cup at the 633.30. From that cup closing, we would expect a small handle before continuing to the upside. So that's kind of the same thing we're looking for on SPY here, is we're looking for that small pull downward to be able to engage into positions. Sorry, I have to delete a lot of these lines from yesterday. I'm going to keep that highlighted because that is a fairly dangerous zone right there. QQQ, same thing. Actually, QQQ looks really good out of anything, so I might be trying to target QQQ instead of SPY today. That looks super good. So once we get a pull down, which we should be doing because we do have this smaller cup closed here. So we should get a pull down, should form a handle, kind of the same thing we're looking for semiconductors and the SPY. Volatility is continuing to pull down. It did pull down all the way to the 89.91, currently at 90.17. And let's check the HIG. HIG has been selling pretty heavily. It did hit a high of 80.04. It's currently at 79.94. So before we enter our calls, I do want to start seeing the HIG catching weight. There's that short we talked about. So potentially this 20 mile range can be an area to take calls to the upside. But we still have a little bit more to pull down for semiconductors. Now QQQ is looking good, and again, I do want to target some of these QQQ calls if we are going to be seeing upside today. Now, where is the HIG? Hold on. HIG is still at the 79.93. So again, I really do want to see buying in the HIG before we try to engage on positions in this. Going to delete that cup because we already know it exists. Now if we pull down all the way to the 731.61, that won't invalidate this cup, but that will create a very large inverse cup to the downside. So the lower Bollinger here is at the 732.49, and we're still seeing selling out of HIG, so we do have to be cautious. It's at the 79.92. It's at 79.94. So I'm still waiting on my calls here. But potentially we could be targeting that 745 today. Which might seem unreasonable, but I do think we can target that range. Now I want to go ahead and take a QQQ call. So let's see. The IV is very, very expensive on those right now. So maybe not. Let's look at SPY here. Yeah, the SPY calls are much more reasonable today. So I want to look at volatility one last time. It's at 90.91. This did pull up to the 91.04. And let's check the HIG. The HIG is at 90, or at 79.96. So we are starting to see buying out of the HIG again. So I want to go ahead and take, maybe not, VIX just pulled back up slightly. Now again, we do have to be cautious because this can turn into that very large inverse cup to the downside. But I do want to target some of these 46 calls to the upside. If we don't pull down all the way to the bottom of that, volatility pulling down slightly. So we're going to go ahead and engage the call here. And this is the 746 call for SPY. Now I'm going to put an order on my DraftKings put to basically close at that 25 range. Currently it's up 167%. So market conditional order. Let's do 25.01. And that will be a very nice trade. Our drip calls are doing very nicely today. Our USO puts are doing super, super nicely. Mine are up currently 39%. Now we will be hedging against our call here in a few minutes. But we are seeing volatility pull down pretty hard, which that's kind of exactly what we want to see. And we're seeing the HIG buying upward, which is also something we definitely want to be seeing here. Dollar has been pulling down slightly. It's still super, super elevated, but it pulling down is a good thing. Sorry, I haven't had a lot of time to check chat this morning. Let's go back to the SPY. I'm going to delete a couple of these drawings just so that they're not in the way. Still seeing some buying from the HIG. I want to take two of these 748 calls as well here. And then we'll hedge everything once we pull upward slightly. So we're going to go ahead and grab those. Because if we can reject this range right here, basically not pull down to the 743.35, then this is going to be super, super bullish. Okay. But if we do pull down to that range, then that turns super bearish. So kind of caught in between the ranges here. But I will be hedging a put when we get to the middle Bollinger here. And that will be at that 745.64 range. Good morning, good morning. I ended up clearing all those drip calls, so I'm very happy that they ended up paying out for people. I only have the September ones going, so it's super cool that we were able to get those to pay out. Our CVS put is finally gaining weight. Our DraftKings put is up 205%. Volatility still at 90.50. And our HIG is at 79.98, so we're seeing a lot of buying out of the HIG. That should coincide with a lot of buying out of the SPY. Do kind of want to see what's going on with the bottom here. So this looks fine. We should be having the bounce here. But again, we are going to be watching to see if they do try to take out that 743.35. Because that would be pretty bearish. Hig is at 79.97. But the plan for today basically is to hit to the top of that gap, which would be the 748.18. From there, there's still a lot of potential upside, but with OPEX, I don't like to mess around with OPEX a whole lot. So if we're going to get our buying to the upside, then we will take that 748.18. So I want to go ahead and put a market conditional order on my calls. And we will target the 748.15 for that. Then 748.15. Okay, so I have my market conditional order set up. Now again, we will hedge a put when we get to the 20 MA on the 5-minute time frame. Again, that's going to be around this 745.64. And it'll probably be a 743 put, something like that. But we're seeing a lot of good signals. Volatility still pulling down. And for the HIG, it's at 80 now, so a lot of good buying signals. So that's great. These trip calls are absolutely blasting off right now. Now I do want to add just a couple positions to my American airline calls. Now these ones are going to be the June 28th 16.5 calls. They're very cheap and I'm expecting the push upward. No, I'm not trying to sell them, I'm trying to buy them. Press the right button. Okay, let's try to fill those at 0.23. Okay, got those filled. Okay, so our CVS call is getting ready to do very well. Our DraftKings put is up 230%. Drip is doing fine. GDXW down a little bit. Our real puts are getting absolutely destroyed right now because that symbol is just has been flying. But because they're so cheap again, I want to add one more position to that. Our silver calls are down, but I'm okay with that. SPAXU puts are down slightly. But I am okay with that position. Our Yoso puts are doing great. Our WTI puts are doing great. The 4-strike puts are up 26%, and the 3-strike puts are up 66%. Now we're getting near the 20 mile here on the 5-minute time frame. So again, we will be hedging a 743 put against this, maybe even a 742. Let's see. Yeah, I want the 742. I don't want to spend a whole lot on the hedge currently. So went ahead and opened one of those. But our upside is looking very strong. We are seeing, let's see if the HIG's still buying. HIG is still buying upwards, so it's at 80.02. Again, that's like one of the best signals you could be seeing is that HIG buying upward the entire session. And our volatility is at the 90.16. Okay, I can finally look at chat. Let's strike for American Airlines. So I'll type these out. So this is the June 28th, 16.5 call. I entered those at 0.24 per. Then TSLL, we have these 17 calls for July 17th. Now I am going to be making a Google Sheet. I didn't have a chance yesterday, but I am going to be making a Google Sheet basically going over all of the trades that we take. Volatility at the 90.21, so very slight increase in that. Basically right as we grab that put. But we're still seeing buying out of the HIG, so I'm not too concerned one way or another right now. Now I do want to look at the gamma today, so just give me a couple minutes here. Thank you. So let me get the gamma pulled up on my phone. Let's check the GAX, 0 DTE. So there is a call wall at the 750, and there is a put wall at the 745. So if we do reclaim that level, then we should be trading basically between that 750 and the 745. Which means that our target up here on the calls should be pretty good if we're going to actually, get that upside. Now, if we are going to push down, which potentially we can here, potentially this is trying to form some inverse cup, then there is a volatility trigger at the 741. So if we do have a massive push down, then, our put is going to pretty much entirely save the day. But seeing how there is a put wall at the 745, we likely see dealers try to reclaim that level. And what's going on with the HIG? Let's see. HIG is at 80, so remember it was at the 80.02. So if that starts selling off, then that could be a major signal that we're going to head to the downside. And our volatility is at 90.19. So I hope everybody was able to take those put hedges there, because my put hedge is completely paying off what the calls are losing right now, even though I do expect the upside. Now for semis. Again, this can be a cup and handle, so we just have to watch that closely. I am expecting buying up above this 745 range on the SPY. And I don't want to add to the calls or anything. We're positioned very well on both ends, so if we're going to get our upside, these are going to pay out immensely. If we're going to get our downside, then, you know, the put IV's doing very well. Now, if we do get our upside today, then the challenge portfolio should be over the 6,000 mark, which would be great. That'd be a very good start for the first week. Seeing additional buying from the HIG. What is the HIG? It's the HYG. It's the corporate high yield bonds, basically called junk bonds, but it's essentially the top echelon of equity risk. So it's extremely important to see whether this is buying or selling, because if this is buying, that means almost, you know, almost 1-to-1 that we'll be seeing buying through the market. If we see major selling here, then that will mean we will be seeing selling in the equity market. Because with junk bonds, they're pricing in basically the yield spread above equity prices. So they have to be very specific on whether they are buying or selling those levels. Volatility is at 90.04, so again, we should be seeing our buying. Semis are starting to buy up here, but we do have to be cautious with semiconductors because they basically have been riding this upper Bollinger the entire morning, which that can mean a large inverse reaction to the downside. So that's just something we have to be very cautious of. Volatility at the 90.14. So if we're going to be seeing our buying that we're expecting, we want to basically see this pull down to that 87. HIG is sitting at the 80. So we should be able to stay above this 745 if we're going to hold above that put trigger or that put wall. Let me see if it has adjusted any. So there is a call wall and put wall at the 745, which means that we basically need to break below this level or push above it. No, that doesn't tell us a whole lot, but it is saying that there's a lot of contracts there. So we're either going to see a massive push to the downside or a massive push to the upside. And so far, just based off of the HIG and volatility and everything, the upside is looking good, but we do have to break that level. Now for semis, because we have been sitting in that upper Bollinger basically all morning, which it still looks like they want to take that 633.30 out. But because we've been sitting in that level essentially all morning, I do want to hedge with a couple of these 4 straight calls for today. And I'm going to grab 4 of those. But again, that's just purely a hedged position. If we see semiconductors start pulling down, I have every expectation for those SOXS calls to burn. So again, they're just purely a hedge. Call premiums are starting to gain pretty nicely. Semis should strike that 633.30 very, very soon here. Now, I do want to mark this out because this is where we have our MCO, which is the market conditional order. And I have this at the 748.15. So we're going to mark that. There. Now for the put side, we're not really going to put a market conditional order because if we're going to be seeing the puts paying out, we're basically going to be going all the way down to that 737. So downside's huge, upside's huge. but we will take it level by level. Now, with that said, again, I want to look at the HIG. It's still sitting at this 80 range, which isn't bearish or bullish, but we do want to see buying within this. Volatility has picked up slightly as well, so it's at 90.39. Again, we do want to basically see this dropping to that 88, 87-ish range today, if we're going to be seeing the upside buying that we're expecting. Structurally, it looks very good for our upside. We have multiple cups, basically cup, handle, should form a smaller handle and start breaking out. Do have semis hitting that 633 gap, which is very important because that is basically the top of this cup here at the 633.55. Second we hit that, we start pulling down, so just have to be careful with that. And in fact, I do want to hedge just one more put here, which will be taking the same strike, the 742. So we're very well hedged on both sides now. Our CVS put is finally gaining weight, which is really nice because it's been sitting at, negative $60, negative $50 basically the entire week. So at this point, we just wait. The HIG is selling slightly, so it's at 79.99. As I say that, it pulls back up to 80. Now I want to go ahead and check the GEX again. Still the call and put wall at the 745. Semis do need to cool down a little bit here. At the top of that cup basically filling right to the penny. Which means that, this can all be a handle basically to the upside. So we can pull down very hard and it can still be bullish here. It needs to be at the 44. But that's the top of that cup. Now structurally, again, we are looking very, very nice here. We have the cup, the handle, and potentially the nested handle, which that should take us up to that 748.18 if we're going to actually see that breakout. Our volatility is at 90.24. So again, we do want to see this pulling down very heavily if we're going to be getting the upside that we expect. HIG's still at 80. We want to see buying in that. Dollar did pull down to the 157. It pulling up right now can be bearish, so I'll have to be cautious of that. Let's go back to the SPY. So we're waiting to see if this is a handle breakout to the upside, or if we're going to create additional bearish structure to the downside. It did pull down to the 744.57. Volatility picking up slightly, so at the 90.32. And the HIG is at 79.99. So if we start seeing additional selling out of the HIG, then this can turn pretty bearish. And if we pull back to the 740.02 essentially, then that will create an inverse cup here. So ideally we break out to the upside, so our calls print. But regardless, we're set either way. Now if this is going to be the upside breakout, then this will, basically it should push to that 748 range if this is going to be that upside bounce. With the call wall and put wall being at the 745, the market definitely wants to break from this range. Whether it's to the upside or downside. The HIG is still at 79.99, so I am again expecting buying in that. Volatility is at 90.29, so I am expecting that to start selling. Now I'm tempted to go take a cheap hedge for USO. just because our positions are up, you know, very, very substantial. So let's see. Yeah, there's really nothing that's going to be a good hedge to that without it costing like a ton of money. So we'll have to hedge through other positions, which I'm not too concerned about right now, but we could always grab some drip puts or something like that. It should be that call or that cup and handle breakout, which we are seeing. This is another cup closing, so we should be expecting another handle and our push upward towards that 748. So that should work out very nicely. Hig is back at 80, but again, I want to see that really buying upward to tell us that we are going to be heading upward. Volatility is at 90.35, so dealers are still somewhat hedging positions here. Portfolio did cross over 6,000 just for a second there, but doesn't matter until the end of the day. I don't use stop losses. Um, Sometimes I will, but for the most part, I don't use stop losses. Sorry, Jen, I just saw these messages. Um, yes, you can. You can see the previous classes. Good morning, Nimble. So I am in, and let's actually just show you. It's kind of hard to see here, but I'm in the 748 calls to the upside. I'm in a 746 call to the upside, and I have two 742 puts as a hedge to those positions. So I am expecting this push to the 748.18. But again, today is OPEX. OPEX is, you know, basically one of the hardest trading days you can have just because they really, really, really like to chop positions up. And dealers are focusing entirely on closing on a very specific strike here. So as much as the structure and everything looks good, in the end that may not mean a lot just because dealers will be trying to focus very heavily on closing out a strike. The Hig is at 79.99, so still seeing a little selling in that. Volatility is at 90.30. And let's check our semis. They are still pushing very hard. We'll look at the 4-hour time frame here. Yeah, basically all-time highs on semis. Well, not basically. I mean, it is. So that's a good thing. That's positive for, us trying to see our upside on SPY. But we do need to see volatility pulling back. And we do want to be seeing the HIG buying to the upside, which it's currently at 79.99. So I want this pulling up well above that 80 range today. And there's this smaller handle on that cup we talked about. So the upside breakout's looking super, super, super good today. Just we do have some conflicting signals that can get in the way a little bit. Now again, we do have a market conditional order on the calls. And let me just drag the center of the screen. At the 748.15, that'll be slightly above where this very large cup is. But potentially we could be heading up, you know, pretty massively on the day if we're going to be seeing the buying that I think the market potentially can give us. But with it being OPEX, we're not going to be greedy. Just going to go ahead and focus on taking that range that we originally targeted and, you know, basically ending the week on a very good note. But if we can close that level, we will be ending the week with basically over $1,000 profit, which I'm very, very happy about. Very likely forming an additional handle here before continuing up to the upside. We do want to see our volatility pulling back, which I do think it'll start happening fairly soon here. Calls have gotten shaken out very, very hard over the last few sessions. So, in last few sessions, I mean over the last basically few weeks. So, ideally for the dealers, that should be, you know, everything they need to buy this upside. Basically, they've already shaken out most of the call holders that are holding for this expiration. But that's the reason why I dislike OPEX days, is because it's very, very strike based. HIG back to the 80, so that's positive for us. Yeah, you're very welcome, Nimble. And we will be doing that class tonight. I was just not having a good afternoon yesterday, so I wouldn't have been able to do that class very well. If we do head to the 745.56, that will form a small inverse cup here. Volatility is still at 90.24. Okay, so that smaller inverse cup did close. And let's check semis. I think that's going to be important. Because remember, with semiconductors, we did push the top of that very large cup, which is a very large handle for that prior cup. But because of that, that can mean we can pull down before heading upward. So just something to be a little cautious of. And we have been seeing semis pulling down since hitting that level. They ran to the 737, or excuse me, the 637. And now currently at the 633. But we have been needing to see a cool down within semiconductors all morning because they have been pushed well into their upper Bollinger the entire session. So this little selling here isn't exactly unwarranted or anything. Volatility is at 90.23 still. And let's check our HIG. HIG is selling a little bit. So again, this can be very, very concerning here. It's at 79.98. Now, if we do see this break down entirely right here, then our puts are going to pay out very nicely. Do have another important level at this 744.30. So if we do pull down to that, that will close an even larger inverse cup. But if we see a bounce before that, then that would still be that cup and handle. Semis did pull down to the 631.53, which does give a little bit of reprieve. Still a little too soon to say, but if we bounce back to the 746.91, then that will close this large cup, which will be basically that cup, the handle, and the HIG is at 79.99. And volatility is at 90.33, so it's still holding very strong at that level. So we'll see if we get a bounce in there or not. But I want to check the gamma again. So the call wall is at the 750 while the put wall is at the 745. So that is telling us that we should be seeing basically the price action pull above that 745 and trading between that 745 to the 750 range, which definitely supports our exit at the 748.15. And the American airline calls are starting to do good. The ESO puts are up 46%. So again, we do need to see a bounce all the way back up to this 746.91 if this is really going to be bullish structure. Let's look at the volatility again. So that is ticking up slightly. It's at 90.41. And HIG is at 90 or 79.99. We do want to be seeing our HIG buying upward, and we do want to be seeing our volatility pulling downward. Very, very important for us to get our level today. Big red on QQQ, let's see. QQQ though still has this really nice cup and handle formed. And this is on the 1 minute time frame. So we should be seeing QQQ move back up to that 738.42. Especially now that it has had a little bit of a reprieve from the upper Bollinger to the middle Bollinger. So that should be flying again. Yeah, that looks good. Volatility is still picking up a little bit. So 90.52. Just have to be very careful with that volatility rising. But based on what we saw with QQQ, kind of what we've seen with semis, we should be seeing this push to the upside. There's a ton of bullish structure built. Yeah, even semiconductors building a little bit of that handle. So we should be pushing back up to the 637 Volatility has pulled down a little bit. So was that 90.50? That's at 90.31. So we need to see a continuation within that. And then the HIG is at 80. Give me 1 second, my daughter's knocking on my door. Alright, I'm back. My daughter wanted to give me her pancakes, so. Okay. So our price action is looking pretty good. We should be hitting our level. Let's check volatility. It's at 90.28, so that's slowly pulling down. And where's the HIG? At 80.01, so both signals we want to see. We just want to see volatility pulling down a lot harder than it is. Again, I want to see volatility a lot closer to like that 88, 87 range today. Let's check QQQ. Yeah, QQQ should be curling back upward towards that 738.42. In fact, I think I'm going to take a very quick call to grab that. And I'm going to set the conditional order at that 738.31, just to make sure we really secure that level. Okay, so got that set up. Volatility at the 90.29. Of course, immediately when I buy that QQQ call, they start pulling it down. We will survive. I'm not hedging this QQQ call. I'm just going to basically let it run. If we do start having some massive pull down in the market though, I will cut that and, just take the loss. Alright, there's that push. So we only need the 738.31. The HIG is still buying upward. So it's looking good. Semi is starting to pull up a little bit as well. Yeah, this should pull up to that. Which would give us this cup and handle structure on the SPY as well. Again, we do need to see this pull back to the 746.93. And where's our HIG? Our HIG is at the 80.02, so that's looking good. QQQ starting to head to our target. And again, I just have the market conditional order set at the 738.31. And that'll be, a nice little trade. SPY's looking very much so like it wants to break out though. So once we get this movement from QQQ and from semiconductors and everything, we should be seeing the SPY kind of following suit. So we need another basically 40 cents of upside in QQQ to take our level. SPY is hitting that level. So that's 746.93. So that's looking super good. Our QQQ call here should be claimed any minute. I should say any second. Only need 15 cents to the upside. There we go. Okay, so that was a nice little trade. Now for SPY, we just continue waiting for our breakout. Now that we have closed this cup here, we can't expect a small handle. From the small handle, continuation to that 748. Now with that, I'm going to go ahead and close one of the puts on SPY here, because we do have two of them. So if we do start pulling down again, then I will, engage into more of those puts. But we are going to keep one of the puts going, but we just want to reduce the burn on this upside push. Because again, the entire market's pretty much telling us that we're heading to this upside now. We just need to see volatility really break. We need to see the HIG just continue doing its thing. It's still at the 80.02, 80.03 now, which is basically one of the higher levels of the day so far, so that's really good. Our SOXS puts for July are up a ton, up currently 31%. We're not going to be taking profit on those currently. Now, one thing I do want to do now that DRIP has hit this 755, or not 755, but the 555 range, I do want to take just a single hedge put for September. So I'm just going to take a single one of the 5 strike puts for September. And by taking that put, that kind of locks in some of our profit. We're very, very heavy on oil shorts right now, so we do want some hedges just in case something with that deal goes haywire, but overall it's looking great. Do you think we had more TSL calls? So let me look at Tesla really quick. So Tesla has formed some bearish structure. And this is just over the last few sessions. But overall it's still in a large cup and potential handle. Yeah, I think we can add a single position to it. So just very, very light. So I'll go ahead and add a single one of these. Okay, and now we're just waiting for our upside breakout on SPY. On the 5-minute time frame, this looks a lot better. So you can see this looks very, very much so like it wants to form that cup upward. Which that would be that cup and the handle pull down a little bit for the entire breakout. So that's looking super good. And again, we are expecting this slight pull down because we did close this cup here. From this cup closing, we do expect a handle. From the handle, we should get the breakout to the 748. So we should be good to go here on our calls. Volatility still pulling down, so it's at 90.26. Was at 90.30 something. And let's check the HIG, because it was at 80.03. It's currently at 80.01, so we do want to be seeing that pulling back upward. So yeah, everybody should be having a great day so far. I am in the silver calls, but let's go ahead and take a look at silver, because we are seeing a little bit of a dip in gold and silver currently. So we do want to be careful with that. We want to make sure this doesn't basically pull down to this 57.30, because that would break this potential structure we do have going on here. But let's look at gold. I think that'll tell us a better story. So gold, of course, is showing some pretty bearish structure. We did kind of close that gap down there. But we did target buys towards that lower Bollinger, which is, generally when I try to focus on my buys. The thing I'm concerned about is that this is going to form that inverse cup and handle and continue downward. However, what the trade was before the oil war started, again, this is when the war started right in here, basically right in that range. Gold was super bullish, okay? Gold was not only bullish, it was buying the dip and getting ready to head upward even further. Once that war started, which I don't remember the exact date, I know it started in late February, so somewhere around there. Gold pretty much plummeted. Now that the war is, kind of in a conclusion, I am expecting gold to start buying back upward. Same with silver and everything else. However, we did pull up to the 4400, and now we are currently back down to the 4261. So, not exactly a good sign. But I did add to my GDXW shares yesterday. So yeah, I'm gonna go ahead and take another one of these silver calls. We'll just go ahead and buy the dip on that. Because even if oil takes a while to come back down, and I know people mentioned this in my post yesterday because I talked about, um, the MOU being signed and whatnot. Yes, it's going to take some weeks, even months for everything to get back to normal. But the goal is to see oil normalization occur, okay? And the market will be pricing that in for the future, which means that even if it's not fully there just yet, we're still very likely going to be seeing our instruments pricing towards that range, okay? As long as there's no continuation within the conflict, things like that. So we should be seeing silver and gold having a bounce. We should be seeing, continuation within these oil prices pulling downward, as everything does return back to normal. Now, volatility is at 90.07 or 90.09, excuse me, just shifted. So that has been pulling down. HIG is at 80.01. Now QQQ has finished this cup. The handle, from that handle, we should be basically expecting that nested cup forming an additional handle. So QQQ should be pulling back up still. SPY, there's a small inverse cup formed there. Volatility is at 90.13, so pulling up very slightly. Sorry, I'm just looking at everything really quick. The HIG is still holding strong. And again, we did have that put wall at the 745, and the call wall was at the 750. So we should be expecting to trade between that range. Volatility's at 90.12, was at 90.13. I know that penny downward doesn't matter too much. Let's see what is going on with semiconductors. So they closed that cup, very likely forming a handle here. Kind of the same with QQQ. So after these handle formations, we should be seeing the SPY getting its breakout which actually means I might want to add an additional call here. I'm gonna take one of the 747s. Now, I am very call heavy currently, so if we do get the downside, these calls are going to weigh pretty heavily against my current positions. Now, I do want to hedge an additional put at this range as well, so we'll go ahead and enter back into one of the 742s. Just in case this breaks down. Volatility is at 89.88, so that's a very good signal for us to get our upside push. The HIG is still sitting at 80.01. Semi is breaking out again as well. And QQQ getting ready to break out again as well. So we should be seeing the SPY breaking out. And let me adjust the order for this 747. Market conditional order. Set it for 748.15. And now we wait for our price action. Let's check volatility. 89.89. So still dropping. It was all the way up at the 90.50 range. Just have to be careful here because potentially this can form into some gnarly head and shoulders. So I do want to see the breakout back to that 740, 732 to really kind of invalidate that. BVIX still pulling down, so 89.86. And let's check our HIG. HIG is buying back upward, so it was at 80.01, it's at 80.03. Semiconductors looking good to the upside as well. Volatility still pulling down, 89.85. Now again, we want to see that pull down closer to the 88 to 87 range. But we should be getting our upside break here now that QQQ and semis are running. So again, if we can pull back up to this 747.24, that will invalidate some of this potential bearish structure. But it's looking very good. Semis are pulling up to the 639. QQQ is at 738, almost 739 right now. So this should be telling us that very likely we're going to pull up to our range that we expected. Volatility at 89.74. So that's telling us dealers are not hedging positions. So we should get our upside. Volatility at 89.80. And the HIG still at 80.03. So we're just waiting at this point. I will say this though, I really dislike trading on OPEX days. They're by far the day I dislike the most when it comes to trading. It's usually very, very choppy price action. They work very hard to shake the calls and puts, and they close at a very specific strike. So Would be ideal if we can get our 748.18 already, or 748.15, excuse me, so that we could be out of these positions and kind of call it a day with the 0DTs. What calls am I in? So it actually shows on the side here. I know I can't see the ones at the very top, but I'm in a 746, 747, and two 748 calls. And against that I have two 742 puts. Now on the 1 minute time frame, we are seeing this push into the lower Bollinger, which should kind of give us that boost to start heading upward fairly soon. And this is the 20 MA on the 5 minute time frame. So I do anticipate a bounce from this level. Volatility is climbing back up very slowly though. It's at 89.93. It did drop all the way to the 89.74. And let's check our HIG. And the HIG is selling very slightly. It's at 80.02. Let's check semis. Now, semis do have the ability to pull down quite heavily here. Again, it's been pushing very hard the entire morning. And QQQ still looks really good actually. We have the cup form there, very likely forming the handle for that further upside. Be nice if we can get our push to the 748 already. Do not like our positions getting chopped up here. The HIG is back up to 80.03, so that's very good. Volatility at the 89.96. Or as I said that, it jumped up to 89.98. There's that potential head and shoulders we talked about. Now we just need to see how low this goes. Now I'm not expecting it to pull all the way back to that range, because if it does, then that'll absolutely nuke the calls. Um, but we can definitely follow what's going on with semiconductors. And QQQ. QQQ did not close this inverse cup to the downside. Still a little too soon to say. But if they bounce off that range, then that still holds that bullish cup and handle. If we do see QQQ bounce here, then I am going to add another one of the 747 calls, just because for some reason when I bought into it, it was high IV at the time. Semi starting to buy upward as well. So I went ahead and added another one of those calls. This chop is really nuking the profit on the day so far. Volatility is back up at 90.05, which is not good. I might have to take an expensive put here. Which I really don't want to do. Volatility is at 90.21. So QQQ did close that inverse cup here, which means that we can be getting an inverse handle to the downside. I really don't want to buy an expensive put here, but if we do break this range to the downside, I'm going to take a 744 put just to right to that range. Recoup a little bit of profit off of that. So we're going to go ahead and open that just in case, but we will cut that fairly soon if we do get the upside bounce. So but I just really want to be hedged in case we do get this pulled down to the 744.43. Semiconductors did pull down to the 636.62. Let's check what's going on with QQQ here. HIG is also at 80.01. We do have to be cautious because, again, with that inverse cup closing, this can pull down. Volatility is at 90.29. Volatility is at 90.32. I'm gonna check the gamma again. Still have a call wall at the 750 and still have a put wall at the 745. Inverse cup at the potential 744, 54 is looking really strong. If we don't get a bounce soon, I am going to add some more of these 744 puts. Volatility is currently at 90.28. HIG is currently at 80. So again, we want to see our volatility pulling downward quite a lot if we're going to be seeing the upside. But again, we do have that put wall at the 745, which makes it very, very hard to sell below that range currently. And with the call wall being at 750, that really does open up the 748 for us to be able to profit off of. So, even if the calls are down currently, the upside still looks good. Now with semis, again, we kind of have been expecting bearish structure at the top here because this is a closed cup. Very large closed cup at that 733, basically 55 range, whatever it was. So we have to be really cautious with that. And let's check QQQ. Definitely looks like it's going to run to the 735.63. But technically this can push all the way to that 734. Gonna try to target a little bit of this downside with QQQ here. Let's check what's happening with SPY as well. SPY is at the 745.17. There are those puts taking weight on QQQ. So I am looking for the 734.22 here. Go ahead, claim profit on one. because still potentially we could be buying this back up. And we're going to go ahead and close this other one too. Because we do want just to get some profit on these. Now, looking at the SPY, should have just stuck to QQQ today. I hate OPEX. I've stated that many times. Really, really, really dislike OPEX. We're gonna go ahead and close this 744 put. Volatility at the 90.52. And HIG is at the 80 still. So I want to go ahead and add to the 748 calls here. Now that we took those profits on those puts, doesn't mean we're out of the woods yet, but again, I still see a lot of upside today. Even though this is starting to look pretty gnarly. Semiconductors did hit the 632.49. So my SPY contracts have been getting chopped to pieces. And because of that, we do have to trade a little more aggressively today, which I dislike. So I'm gonna go ahead and take two of these 744 puts. Because if we are gonna get the downside, then I really want to be able to profit off of the entire day. Semis did buy up to the 635, currently at the 634. Now these puts I will exit at the 744.35. So I'll put the market conditional order for 744.37. And if we're really going to see a major downside today, we do have those 742 puts set up.
big spike in the ADL. I think we're just going to exit these 747 calls currently. But we're going to keep the 746 and the 748s going. I don't know why the IV on the 747s have been just so absurdly high. So currently we have the 1 746 and the 4 748s. So if we do get our upside, we'll do very well. And with our downside, we're now well positioned for that. Now again for the 744 puts, I have my market conditional order set to the 744.37. So I just want to basically close that range to the downside. Okay, got those filled. Now let's check our volatility and everything. Volatility at 90.63. Still not set on the selling for the day. QQQ very likely will pull down to that 744. Now, within the 1 minute time frame, we do potentially have this inverse cup. So if we do see an additional rejection there, I'll tack on some more of those 733 or 734 puts, excuse me, on QQQ and write those down again. But only if we see a rejection and the actual formation of this inverse cup and handle, which so far is looking very good. So I'm waiting for a major rejection in semiconductors to really take these put positions if we're going to take them. Because I don't want to be buying into this, filling this cup to the upside. So either we get the rejection or we pull up to the 736.81. Seeing some buying out of semis so far. So I'm buying out the SPY so far. Okay, and that cup has closed. So we won't be taking the puts on that. Okay, so now we can start looking to our upside again. But we're not out of the woods yet. We have a very large inverse cup formed here. So we need to be seeing, a pretty large breakout to the upside. Or else this inverse cup will just kind of overtake us again. Semis are in between two structures here. Both this bullish cup and potentially the bearish inverse cup. This inverse cup did not close, and this bullish cup has not closed yet. Does look like they are going to take the bullish cup though, which is great for our contracts. We're able to take some nice put profits in there. Now that we're pulling up again, if we do see some major rejection downward, then we'll know to grab puts and write them down. At what price do I plan to start the drip CCs? Around that $7 strike. I have a bunch of different calls going. I did have a bunch of 747s. I have a 746 and 748. I cut the 747s just because the IV on them was going a little haywire and working against us. So went ahead, cut that position, but I added more to the 748 calls when we were at the low down here. So if we're going to get our upside, then we have a lot of premium to claim. But they definitely have chopped us up a little bit today, which again, this is a big reason why I really dislike OPEX. Volatility is still elevated, so at the 90.58, did pull up towards the 90.89 or 90.87. So still a little too soon to say if we're out of the woods or not here. Hig is at 80.01. QQQ starting to buy upward, but we do have to be cautious. This can form this inverse or head and shoulder, or not the inverse head and shoulders, but the standard head and shoulders, which would be very bearish. So around that 738.40, we'll be watching very closely to see if they pull upward all the way to the 739 Semis, I'm looking for them to pull up towards this 637 before we have to really contend with that potential head and shoulders here. On SPY, that should be closer to the 746.91 if we're going to see that complete. So basically I want to see a break above that level. For QQQ, I want to see a break above that level. Yeah, basically that's 738.41. We need to see the break above it to invalidate the head and shoulders. And for SPY, this is at that 746.90. Now again, if we hit that range and reject, then I will be taking some QQQ puts. And these will be the 736 puts if I do decide to take them. Watching SPY and semiconductors closely here while this is going on. If I see selling in semis, then I will engage on these puts. So still just waiting here. Wish Weeble would stop changing my list up. Semis are seeing buying, so this is looking good for QQQ. And SPY is seeing buying as well. But we do need to see buying back up to the 747.29 on SPY. We have not closed that cup to the upside yet, so this still very much so can be that bearish structure. We are seeing volatility pulling downward though. Wish my watch list would stop moving on me. Again, if I do see selling here in semiconductors, then I will be taking some of these puts. Now semis do need to pull up to the 739.65 to completely invalidate this head and shoulders. Does look like it will happen, but still a little too soon to say. SPY is looking like it really wants to form that head and shoulders. So we are going to take some SPY puts just to fully hedge things. But maybe not. If we start pulling back up here, if we can hit the 746.59, then that will close a smaller cup, which should bring us to that larger cup to the upside. QQQ is finally getting ready to close that cup. So this is looking good. So maybe I don't want to add puts. Did not close that upside. Now, if we continue pulling down here, I will target additional puts at that 744. So far, semiconductors are holding fine. But again, this can be that right shoulder. QQQ basically close that cup. There's a smaller cup formed here, very likely forming the handle to pull upward. So I don't want to take puts into that if possible. It's basically SPY being the one that's looking not so great right now. Volatility is pulling down while this is occurring, so 89.96. We do have a very defined downtrend on the day. So we do need to break out of that range. Semi's selling a little bit. They've chopped today up so much that even the 746 call we entered at the very low of the day is in the red. Give me 1 second. I need to check my cat because she's been crazy. Okay, I'm back. Sorry about that. It's hard to say, um, because it's like we have a lot of great structure here to head to the upside, but it has been chopping us the entire day. Um, my calls have just been getting absolutely mangled. And again, I bought a lot of these calls basically at the low of the day. Um, and the premium on the calls have just not been taking very well. We have this very well defined selling trend line where if we don't see the SPY break above this, then that's basically telling us we are going to head back down. We need semiconductors to really close this gap to the upside to break this head and shoulders. And QQQ basically has closed that cup. So we are looking for a small handle to the upside. So does the upside look good today? Yes, it does. But we need to see, some actual strength to, break some of these levels. Volatility is at 90.03. It was down at the 89.70 something today. And the HIG was at the 80.04. It's currently at the 79.99. So a lot of mixed signals going on currently. And with this extremely, extremely strong resistance line, basically we need to see the breakout or else we're going to drop pretty hard. So that's what I'm looking at. And in fact, because of that, I think that I want to take a couple of these 746 puts because either we break above this resistance line and I'll cut those puts for a small loss because at that point we'll be able to, you know, have fairly realistic expectations that the SPY would be pulling upward. But as long as we are not above that line, then I'm going to expect us to reject it and head back down. Why are these 746 puts not showing on here? Oh, that's because the call and the put are right on top of each other. But basically, either we're going to head to our upside, cut those puts, and, you know, see the price action we're expecting, or we're going to just entirely start breaking down here. But we do have to break above this channel. I was wondering why the portfolio pulled down so much. Some of the oil positions pulled back in the profit. Well, how much they were profiting anyway. So again, if we can see a break above this channel, then I will cut those puts that I just took. Because at that point we can have the expectation of, heading to the upside. But it has to be a fairly decisive break above that channel. We are seeing semis starting to pull down a little bit. And again, they have not closed this cup to the upside. And because of that, this can be, the inverse cup and handle, the head and shoulders. And if we do see the breakdown here, I am going to be exiting the 746 call. The IV and the calls is just not taking very well right now at all. There's kind of no reason for the call that's basically in the money to be as red as it is, other than the IV is just not there. But if we do get our upside, then that IV will shift pretty quickly. Semi's starting to see some buying. So we're at the 638.82. I think we have to go to the 638.95 to really invalidate some of this bearishness. We have broken above that trend line, so I'm going to go ahead and cut those 740 or the 746 puts. Now I'm going to cut one of them. Well, I'm also going to cut the 742 puts and just use the 746 put that we do have as a hedge to the calls. Okay, so that's what we'll do with that. Now, I would like to see this push all the way to this 747.29 because that would basically invalidate all of this bearish structure. So if we can get that, that'd be very, very ideal. We have broken through this major resistance range, which that's super good for us. That should be telling us that we should be heading to that range now, finally. It's just a very, very hard chop to get to that point. Now we're going to add one of these 746 calls just to ride up to the 747.41. So I'm going to put a market conditional order on that. So we will set that to 747.40 just to basically secure that range. And I'm getting a phone call, so just 1 second, everybody. Sorry about that, I had a phone call. Yeah, I mean, a lot of our structure is building to this upside today, so I think it's fair to have the expectations that we will be having that upside push. Volatility is at 89.92. The Hig is still down. Now, I am going to be ending the stream fairly soon because I'm feeling kind of sick right now. And I want to lay down for the class later. But with that said, you have to be really careful with today. I heavily dislike OPEX days, and you can kind of see why. The chop is just massive, 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 massive chop. And a lot of conflicting signals. So, I really dislike OPEX days. So, just be very cautious with the trades. But again, I am targeting that 748.15. I do think if we can break this 747.41, then that'll really set us up to have that great day that we're expecting. Basically close that cup there, form a small handle, and then off we go. So that's what I'm looking for. Semis, kind of the same thing here. We should be closing this cup back up to the 639.59. From there, forming a small handle for continuing upward. So our upside looks really solid. And even within QQQ, we did invalidate that full bearish structure. We did close the cup, and we are forming a handle. Looks like a handle. To push to the upside. So I'm not seeing a lot of bearishness. The most bearish thing on the day is that volatility was elevated. It is starting to pull back a little bit. But the main thing that's really throwing me off today is that we want to be seeing the Hig buying upward, which you can barely even see the price action here because that big candle earlier. But we want to be seeing the Hig buying upward. Okay. The ADL on the Hig is looking very good. So we should be seeing some upside buying. But that's, something I'm definitely looking for here. Volatility is pulling down very aggressively, basically to the low of the day. So it's at the 89.63. So we should be getting ready to have our upside breakout. Yeah, a lot of the structure throughout the market looks very, very solid. So I am expecting that push to the 748.15. Yeah, I really dislike trading OPEX. I think next time we have OPEX, we're just going to ignore a lot of the 0DTs. Yes, there's always opportunities to take in 0DTs on OPEX, but OPEX will just chop your contracts up to pieces. Again, it's like, for example, I have calls that are technically in the money. I bought them at the low of the day and they're down 40 something dollars right now. Um, so OPEX is kind of terrible. It really just destroys your contracts. So next OPEX, we're not gonna be focusing on the 0DTs. We'll just focus on looking at the dated plays and, seeing if there's opportunities within that. This is at the top of the cup here, and this is on both the 1 minute and the 5 minute time frame. But that top of the cup would be at that 7:48:18. I have the orders set to 7:48:15 just to make sure we hit that level. Now on SPY here, we still have not fully broken out of the bearish structure. So again, we have to be very careful. And within semis here too, we still need to close this 739.59. So we can pick the selling up. But I do think that the market will buy this up, just based off of volatility and everything. Volatility is telling us that the dealers are not hedging very much right now, which means that very likely they're targeting one of these upward strikes. We do have the put wall at the 745, the call wall at the 750, so that does tell us that the market very likely wants to trade somewhere in this range and wants to close somewhere in this range today, which this is very supportive of us seeing our upside. So I do think we'll see it. It's just being a pain, but it is what it is. Other than that though, I will see you all in the class tonight for those who want to join that. Um, Other than that, I will talk to you all in my video on Sunday or on the stream on Monday morning. But yeah, I'm gonna go ahead and call it here. So I hope everyone's had a fairly good week. This week has been pretty good for me. I was closer to that 6,000 range, but SPY is just chopping us to pieces. And until we get our upside move or the major downside move, we're just going to be sitting at this 5,500. So with that said, at least we are up the 500 for the week. But we did put a lot of those winnings into some dated stuff. We do have some GDXW positions going, which currently I think those are getting blasted pretty hard. It's annoying having a watch list with 200 something symbols because the Webull on the computer will shift where the watch list is at. So basically I'll be like, I keep it alphabetical, so I'll be in like the G or the F, and then it'll just pull back down to the SPY or whatever I'm watching. So currently within our GDXW shares, we're down about $30. I'm not too worried about that. Again, I do expect gold to, push upward quite a bit. And that also pays a weekly dividend. So that'll be slowly, helping that position as well. The weekly dividends can be between 20 cents per all the way up to about 80 cents per share. With gold being beaten down, the dividend has been lower, but I am expecting gold to eventually start pulling back up again and creating a strong dividend. Seeing some buying out of the SPY. Again, we really want to see that 747.41. That's a very critical level because that will break all of the bearishness of the day. So if we can see that range, then the upside calls should pretty much be a no-brainer. But until then, it's very difficult. These calls are basically in the money that I have, and they're barely up right now. Um, Up only 20 something dollars, which is, absolutely shameful for being a whole dollar in the money. So I'm waiting for the premium on these calls to really start taking off a bit. As you can see, just getting 50-cent upside has pulled our portfolio up roughly $200. So it's just I hate OPEX. I hate OPEX so much. It's GDXW. And I have many different watch lists. I probably have like over 1,000 different symbols throughout all my watch lists. So, but my primary one that I look at, where I pretty much watch like every single symbol in every single day, has 214. Wish these calls would get some IVR ready. But yeah, that's what we got going on, everybody. So it's looking super likely we're going to close this 747.41, which again, that's very bullish. That breaks all of our bearish structure. From there, we form a handle and it's off to the races. So I am selling one of the calls at this 747 41 range. And then the rest of the calls I have set to the 748.15. Okay. So yeah. Is there any other questions before I go ahead and end the stream for today? If not, then I hope everyone has a wonderful weekend. I hope you all had a great week. I know that this week has been very good for me. Yesterday we basically were at 4,400, so we've been able to pick this up quite a bit. And you will see that throughout this challenge where we do have, you know, drops downward and then it pulls back up, things like that. Because again, we're trading for opportunities, so if I do see opportunities, I will engage on them. Doesn't mean that every opportunity is going to work out, but I will still be trying to take those opportunities regardless. Because that's just how I trade, so. Anyway, with that said, I hope everyone has a great weekend, and I'll either talk to you in my class tonight, or I will talk to you in Sunday's video, or on Monday's stream. So have a great weekend, everybody, and thank you for stopping by to watch.